Yeah, did I not get change the day? It is. A little quiet, huh? Okay. So does this sound a little better on this here, as far as the sound goes? What a day again, huh, folks? Yeah, we'll get started here in just a couple minutes. Yeah, I'm sure they do know what's best for you. Ran away, thank you. Since this will be the last broadcast of the year, I'll talk about it again, but make sure you sign up for Twitter. I'm going to try to keep up with some things on Twitter. So handle is expert with no E, portfolio expert. So it's Twitter/portfolio expert with no E. Yeah, I forgot about the Chiefs game. All right, folks, give us about a minute and a half. We'll get kicking off here. I got a lot of stuff. Full sheet tonight. Oh, I'm drinking Runa. Runa. It's some tea from South America. Like one of these is 2 espressos, but it's not coffee caffeine. It's different. No, I'm a caffeine freak. Yeah. Yeah, there's absolutely, there's 6 calories in this stuff. All right, folks. Okay, a little different screen here. I just want to, before we get going tonight, this is the last one. It's hard to believe another year's went by, and we've got so much planned for next year. I'm really excited. You know, those of you that are hanging around, we have the live room. We've got indicators being launched on TradingView, a lot of stuff going on. We have another major project going, and we're developing some of our own indexes. It's even going to end up to be the WaveTech 100 or the 150. I'll show you a little bit what it's looking like. And it's a concentrated index that pretty much hits all of every sector and virtually every industry group. So and then we've even got sub-sectors and subgroups and all kinds of stuff. So we're putting our whole index plan together, and we have managed, and we also have a just pure index, equally weighted index. So I really can't thank you folks enough. I mean, it's been like a pretty amazing year. Last year was insane, right? This has been a good year, good solid year. We went through the whole year, building portfolios, running the money, having good returns. Last year was insane, where we had returns that maybe will never happen again. Who knows from that standpoint? But we've got a lot of real loyal followers. You know who you are. Really appreciate it. It means a lot to me. I was on a phone call with one of you a couple of days ago, and someone asked me why I do this. I do this to give back to this community. Next year, we're really going to get deep into showing you how to run your 401ks, not speculate in your 401ks, but actually manage your 401ks better than most of the investment advisors that are out there, unless they're customers of ours. Then that's a little bit different. But the average pie chart investor, we can just trash them like you have no idea. So anyway, just want to really take a few minutes, say happy holidays, have a great New Year's, be safe, all that good stuff. And it's been a great honor. I mean that. So anyway, so let's go ahead and get into tonight. I've got maybe a good rant in me. Last night I was pretty wound up about some things, but let's go over to this other screen here 1 second. So Fed comes out, doesn't lower interest rates. I put some things out on Twitter. I love some of the Twitter responses. I think one guy said, "I'm glad you're not the Fed chair and you're just a trader," because I would have raised rates. But guess who did raise rates? Great Britain, right? The B of E, Bank of England, raised rates. They raised them by 15 ticks. And you know what's happening out there right now? The title of this broadcast tonight is the Fed's failings, right? It's just absolutely is so far behind the power curve. There's such, they're so afraid of everything they do that they might get something wrong, that they're getting everything wrong. They had transitory inflation wrong. Now they've got, raising rates wrong. They should have cut back on the stimulus 6-8 months ago. We should already be into probably the second rate increase if they were really doing their job. And, it's interesting because it looks like, to a point, that all the other central banks, like 20 of them making decisions this week, are front-running the Fed. So they waited, they got the Fed and they're front-running them. They want to be ahead of the Fed here and knocking down some of this stuff. So I have a couple of things that I'm going to propose tonight, and I think one of the things that is concerning to me is what I'm going to start to talk to you about. I'm going to do my best to set up from right now to the end of the year on what my expectations are. We'll probably spend a little more time on this broadcast tonight than normal. I'm not sure. We'll just see how long it takes. But typically what I do on this final broadcast is to try to give you a little more insight. And especially in a moment in time when the there's probably never been more confusing time, in my opinion. Been trying to think of one, and there's just so many cross currents right now. It's ridiculous. So, so what? When I look at what's going on in the world with the Fed and everything else, what we're really starting to see is failure, and the failure is in not necessarily being ahead of the curve, just doing what they should have been doing. They've so focused on the employment situation that the inflation's running. They're not even addressing but it's what here's the mixed. I guess the best way. This is the mixed message of the markets. You got interest rates declining. We did see a steepening yield curve, which was a positive, but maybe not. And I'll go through that when I go through the interest rates, because maybe we're heading for an inverted yield curve, and we're going. I've been talking about this for what, 3 or 4 months. You folks have been hearing me talking about the economy hitting the wall. Well, it's maybe going to throttle back itself, and it's not about any kind of virus or any of that stuff. It's just a natural cycle. If you look at where we came from after they shut the market off, shut the economy off, and where we are now, we've accelerated. And every one of these bankers, I saw somebody on the New Zealand finance chief. I'm not sure what his actual title was, but they're just glowing in this great economic growth. And of course, what? It's going to go on forever like this, right? This just keeps going and going and going. No, it doesn't. We're hitting probably the end of the cycle, looking at the low from 18 months. And I'm not predicting necessarily a major rollover, but I do see this stalling of everything. And, and I'll go through all the details and the technicals here in a few minutes, but the S&P hates it above 4,700. We actually printed an all-time new high and just reversed and got rejected again, and traded down almost 80 points off of about 70 plus off of the highs today. So we're just seeing all of these cross currents. Nobody has any conviction. Nobody wants to come into 2022, and I think 2022 may be the year of uncertainty, and that is going to get people to be more cautious. There's a lot of things that go on. I'll develop that as we get into next year when I come back after break. But to me, it's absolutely crazy, the cross currents that we have. Like I said, is it inflation, or is the taper happening? Nothing seems to make sense, and that's why last night I was talking about what happened with the Fed. They're just lost. They have no idea what they're doing. And I've said this before, as Paul has admitted in his conferences, well, no one really knows what to do because we've never dealt with a situation like this before. And so they're just stuck on keep pushing forward like they have, because they don't want to rock the cart. As I said, they're more worried about the reaction of the market than they are the inflation, which is the real evil. They don't even think anything. Some guy makes 50 grand a year, and you raise all the prices by 10%. You take 5 grand out of that guy's pocket. That's ridiculous. That's a lot of money. And all these folks that are running the show are just absolutely crazy. And I think I saw Summers or somebody going, well, it doesn't really affect anybody, the lower income people. I mean, it's stupid things going on. But I just want to talk about a couple more of these cross currents. Is the Nasdaq tanks, right? It supposedly tanked. Why? Because of expectations of higher interest rates while the 10-year goes down. There's no built-in expectation. And when you see the 10-year, we're about to turn into an intermediate downtrend that we could see. I'll go through the details in a minute, but we could see 110 on the 10-year. I mean, it's starting to look really crazy. And, why would that happen? So I think if you look at some of the thumbnails that I've done over the past several days, maybe the last 2 weeks, One of them was, what is the bond market telling us? It's still sending messages. It's very mixed, but I think it's telling us that there's some real potential headwinds ahead in the economy. And let's see, I'm just looking through my my notes here. Yeah, I think that's pretty much of the riff that I wanted to talk about. Nothing earth-shocking here, but we're just, there's no news tomorrow, so we're on market sentiment. Let me review yesterday's activity, and economically, housing starts came in plus 11.8. That was a blowout number. And so housing just continues to keep moving forward, because what did the Fed tell us? They're not raising rates right now. They're not going to raise rates till next year, so mortgage rates are going to stay low, and it's just stimulating activity. Nothing's changed. In fact, all they're doing is the same thing they were doing, only less of it, right? And so, and even when they start to raise rates, it's going to take them, let's say 3 meetings. Let's say May happens, then we're looking at every other meeting probably will be a rate increase. And you know, what is 1.5% on the bottom end of the yield curve going to do? Probably not much. Not even 1%, 0.75%, right? A quarter a pop. So it's just going to put us back up to 1. And I mean, this is a joke, folks. So permits were up 3.6, so they're still expanding. Claims came in a little weaker. That's going to be a number to watch as we go forward. There's a seasonal tendency. These numbers that we're seeing right now, especially with the continuing claims, is you've got holiday season employment that kicks in a little bit. That's going to start to fade shortly after the first of the year. So we'll see if these numbers start to stall a little bit. Industrial production up 0.5. It was a miss. And, you know, so, you know, the economics that came out yesterday were basically positive. I think industrial production also came out. It was up. No, I just said that was down about 0.3 from the expectations of 0.5. So, you know, as far as I'm concerned, I think as we go into the end of the year, what we're likely to see is some grinding, a broad trading range. I don't expect any collapse in the markets at the moment. I'm going to set up everything looking at weeklies and monthlies and going through all of the indexes, and just to make sure that you have good context as you come in to the year, end of the year. And like I said, make sure you follow me on Twitter, as I will update if I see anything. I will have access to Twitter, but I'm not going to have much bandwidth where I'm going to be. So that'll be about it for me. Okay, so let's go ahead and take a look at the database. And we did see a bit of a decline in the database. We got 343 buys, 827 sells, so we're down to 29.43. We were at last night, we were at 30.90, so not a lot. And a couple metrics that I talk about right here at these levels is that 28 to 22% is going to be about all of the, that will be pretty much where this short-term database will start to bottom. So let's, the other thing that happens is that we're coming into Friday, and there's a couple of things I'm going to talk about for WaveTech and the database and all that, is that the things that we have coming out tomorrow is the intermediate models. The intermediate models are right at 30%. They saw some pretty good liquidation last week, and I brought up this chart. I'll just tell you what it's reading, but you can see these red bars where I'm going over. Let's just go full screen on this real quick. This is on the dashboard of the Portfolio Expert website, and this is definitely getting some red. My expectation is we'll probably see some more red on the intermediate. we're not likely to get any follow through here the way this market's trading. And because we're seeing this liquidation on a short term, we're also seeing liquidation, likely to see liquidation on the intermediate and moving down. And this was the stats from last week, and this is by sector: basic materials. The red is selling that was coming into these sectors. So basically everything's around 40% of all the stocks in these sectors are currently about 50 to 40%. So 50% of all the stocks in these sectors are not currently trending. And we also have broke down by industry group here as well. So there's quite a bit of data here, but you can see where the actual traction is and where it's not in here. And so, but overall, the sectors are down to about 50%, even though the database is down at 30%. So there's a lot of mix in the database from the standpoint of what goes on in these indexes versus the database. So anyway, I think we're going to see more liquidation. I think we're going to probably flatten out in the markets, and that's what the database is telling us. There's no follow through. So when we got up yesterday, we know that Apple got hit, some of the stocks that got hit in the Nasdaq, and that's also affects the S&P. That is, that's where all the selling's at. And I think that's just profit taking. And, Apple was just printing at all-time new highs. So I think we're just seeing some profit taking. You're likely to see that this year, especially if you look back. Think about this. If you're looking at capital gains, it looks like the reconciliation bill, the Build Back Better bill, is completely dead, DOA, dead on arrival. It's not going to happen, which is good because you won't have 80,000 IRS agents running around digging into your life, and you won't have your taxes doubled or whatever. I think everybody's going to be surprised if they did get that passed. They don't have the votes. They can't get it done. It's certainly not by year end. It's what the 16th, 17th of December. Not happening. And in 2022, the way politics are going in this country right now, they're not going to be able to pass this thing. So I would say it's probably DOA. Even if they try to downsize it and gut it, it's probably still not going to happen. And that will be, I think, a positive for inflation. That's going to be a positive for a lot of things that are likely to come about over the next several months. And that's why I just want to back up on the Fed failing. They told us, they argued that it was transitory, and then they threw the transitory away, possibly right at the top. Maybe it is peaking. I've talked a lot about this. Maybe we'll touch on a few things tonight that show where, like the BDI, the Baltic Index, all of these metrics are pulling back and not necessarily accelerating the things that were causing the inflationary spike. And even the supply chains are improving. And so all of that's just another reason, all of that stuff happening, that they should have pressed it on the, taken off the pedal and then, raised rates, put the brake on. And I think this is going to be, when we look at March, coming into the end of March, we're going to have a pretty good picture, possibly for the next couple of years. It won't, when this thing hits the wall, we hit some kind of cycle, it's going to be a bigger cycle. I think 6 months minimum, and probably more of 12, 18 months. And it might be right into the going into 23 before we start to see anything happen. It's going to get real interesting, I guarantee you. And I think I will just say this, that I think investing and running portfolios and stuff are going to be somewhat challenging. You have to be very picky on how you do that. And that's one of the things that that's why we've been digging through our entire database and coming up with this WaveTech 100, 150, whatever it ends up being. Because Jay was talking about it with me today, going, Well, it looks like it might be the WaveTech 150, and we looked through some things today, and I'm fine. I said, good news is it's our index. We get to decide how many symbols are in it. But there's some metrics that will explain exactly what's being looked at. These are fundamentally based. They're also based upon the criteria of our modeling process. So, but I think it's just going to be a really tough year. So this year had tough spots, and certainly the last quarter, but it's just going to get harder. So everybody that was a former gambler that thought that investing was easy when the pandemic was going on, and they just started opening up brokerage accounts and it was going to be easy. In our live room, I think it was this week, it might have been last week, we went through all of the meme stocks, and I think that was pretty interesting. If I could, one of the things I might do is grab some little pieces off of the live room and maybe post those over the next week or so if I can get a few minutes and I have enough bandwidth to get that done. So anyway, let's go ahead and take a look at these indexes and get into the crux of tonight's presentation. By the way, did you folks notice where gold is trading? 1804. So big time. That's just another one of those mixed signals I was talking about. So we'll cover that here in a few minutes. So as we take a look at the S&P and the futures, we basically, I don't know how, let me count these real quick. For 6 days, 7 days, take that back. Yeah, 7 days, maybe 8 days, we've been trading, just whipsawing back and forth. We've been whipsawing down to the moving averages in this pattern and back above. Yesterday we printed up. I thought we would see R2 S1 yesterday. Let me bring that up here. What we got yesterday was almost an R3. R3 was 42. R2 was and 43 high, so we hit exactly an R2. S1 80, so we hit the R2, reversed and traded down toward the S1, but we ended up printing all the way down below the S2 here. We had a low of 42, S2 was 58, so we almost did S3. So we virtually did R2, S3. I thought we would be in that range of 80 to 4680 to 4742, but that was pretty substantial. I have to point out something, and this is important that you see, is that the PPMs, PPM1 is still accelerating up. So in fact, I still think we're going to stay above these moving averages here. Today we're probably looking at S1 is 46.36. We have low printed 52, on the upside 68, but the R2 is 47.07. So that's probably going to be an S1 R2 for tomorrow. So let's set up some. I'm going to use the S&P cash to set up the expectations, trying to put together the next couple of weeks as we go forward. Okay, let's go to the SPX. This is the daily. Like I said, if I were to blow up this, in fact, why don't I? You can see each bar, one up, one down, one up, one down, one up, This two down, two in a row, one up, one down. But meanwhile we're just staying above or into this moving average pattern, and that is, I think, probably the more interesting part of this pattern. We also, I'm sure there's going to be a lot of videos out there that there's a head and shoulders top, maybe forming, but it's actually more like a head and shoulders bottom. But I can tell you this, that head and shoulders bottoms don't happen at all-time highs. They happen down at the lows. They don't happen up here. When you get these kind of configurations, they're typically some kind of double three corrections, something like that. But this entire formation going back to the lows at that 4504, I think we printed, this is a cash, I think we printed 492, 4492 on the downside. We also had that cycle high come in here, and we're just continuing to waffle sideways. I think this was a mid-cycle high that's coming in, and I think it's setting up a broader range, which I'll set up here in a minute on the weekly charts. But the fascinating thing to me with just a 475 right now in the S&P, just a slight uptick, is flipping the ppm up. So this is not up right now because the market's closed. And I'm just going to flop back to the futures. You'll see it's turned up. So we have an accelerating, not only is it turned up, the ppm 1 is at a trend mode up 0.28. So this is going to be interesting to see if we don't see a recovery as we come into tomorrow's action. So let's go to the weekly and try to set up some expectations for the next several weeks. You folks may remember, may not, but last Friday I talked about this on Sunday night. We got an RTX sell signal last week on the weekly S&P. So we should spend at least 2 weeks sideways, and that would put us right into the final week of the year. And like I said, my expectation on a weekly basis is to continue to climb along this the 10 period moving average. That is 46.21. Any sell-off below that would be caught by the 21-week moving average, 45.28, just a simple average. That will be your major support. We'll also see here on the grid, 45.42 is the STX for the week. Now this will update next week, but the expectations are that we will basically have a square pattern here. I will do my best to at least get the weekly numbers out on Twitter and all that stuff. So like I said, and I'm also, there'll be some things that I'll try to get out. The grid will actually open up, will settle tomorrow, so I'll do my best to get some of this stuff out there to the community as we come in. But expectation be pretty much the same grid as this week as far as the high end. I talked about this on Sunday night, 44, R1 44.7. Let me get to the right number. 47.52 was R1, S2 46.27. We went just a bit below that, so we basically have done that S2 R1. That was the expectation because of the RTX sell signal, and we should continue along this upward slope on the PPMs because you have PPM 1 is at a 0.60, so that's going to continue to be very supportive. That number right now is 46.21, going up about 25 handles, so that's going to be 46.40. So you're going to have good support just below where we're trading right now, right around 46.40, 48. Okay, so let's move on. Let's go to Nasdaq. I think I'm just going to do top down. I know Nasdaq felt pretty nasty yesterday, but what did we do on a weekly? We traded down to the 10-pair moving average, which is up 0.67. Overnight, we're seeing a slight rebound. Really, it's flat, up 225. But on a weekly basis, so far we did similar thing. R1 16,534. The high was 457. On the downside, we're trading down toward close to an S3, which is 15,675, and the major support there is 15,543. That's your 21-week. Expectation is with the 0.67. We've got a good chance at closing over 15,940 tomorrow. That's about a little less than a 100-point rally from where we are right now. But if you look at the PPMs, this is the only thing that I will hedge a little bit with here, is that we could see the 15,543. I really don't see us getting to the 40 at 14,767. The expectation for the grid, everything for the next couple of weeks is just like with the S&P. This weekly Nasdaq futures is going to stay in these ranges between 15, we'll call it 15.4, and absolute high end is 17,200, just rounding some numbers off there. That should be it. The thing that is happening here is we're seeing the PPMs in just kind of waffling sideways. I talked about this the other night. We're in what's called trend maintenance mode and on these big trends. And I'm just going to draw it in just so if you didn't see that video, you'll have the benefit of that. And I'll show you exactly what we're talking about here. Just one. So this is what I'm talking about here. Is that this is where you get the acceleration of these primary three averages. So this goes back to July of 2020. This secondary came in around September, and then the longer term kicked in right here in roughly just November, December. And if you've been on the channel for a while, you know that I was talking about the last year, almost exactly a year ago, we got a monster amount of buys on our late October, November, and December. We were buying with both hands on our intermediate database, and everybody was telling me how wrong I was. And that was exactly the midpoint of this rally. If we look at from here, now one of the things I always talk about, this 21 period moving average, I'm going to draw over, I'm going to take it off, but that's basically your demand line. And that had everything to do with this middle indicator just maintaining that upward rate, upward angle of attack, and it maintained well above 0.15 is all it really has to do. And we saw the same thing here for the most part in this index. We're doing the same thing now at around a point, we're at 0.50 on ppm3. So let me pull this off so you can see what I'm talking about here. Is this angle of these moving averages are still in trend mode, including the 10. And so the expectation is, just from a probability standpoint, that these averages will continue to rise, the markets will rise along those parameters, but it's likely to set up basically a sideways range. So let me take this down for a second. I'm going to use this dark area on the side just to draw in a couple things here. So the pattern that is likely to unfold here, I'm drawing this is the weekly Nasdaq, is some sort of correction. If we were to go through here, it's probably maybe an ABC kind of correction. and a consolidation in this range, and then ultimately it most likely will resume to the upside again. The risk on the is really down to this 40-period moving average 14.7, and that number's rising every week. So every week that goes by, let's take that off and see what it's rising at. It's going up about 70 handles per week. So in 4 weeks' time, it's 200 points higher than where it is right now, which put it around 15. So this 15.4 to 15.200 is going to be the big major support at those levels. Okay, so let's go on. Take a look at the daily real quick here. We're getting these volatility bubbles, so with the markets as erratic as they are, we're just not seeing that follow through, but we're down below the 3 averages on the 10 right now. And it looks to me PPMs are trying to turn up, at least PPM 1. Not a lot here. I think this whole sideways range is being perpetuated here is also nothing to be garnered much from the daily chart. The only thing that would be resistance for today, I'll look at the grid numbers. We're looking at 15,739 is S1. We're trading just above that now, 15,897. So S1, R1, we could see an S2 in here, but it looks to me that we're getting just at the point where this is sideways range. I mentioned this in last night's video, is that we got an RTX sell signal. It was 16,238 was yesterday's RTX. We closed at 16,286. So today should have been, the next 2 days should be sideways, and that should just set up this sideways pattern here. Going to the Russell. I talked about this cycle that came in. So far, the cycle low, this is what will determine. This is the daily chart on the Russell. We got a nice reversal. We know all about that yesterday. So we got a reverse of the reverse, and we could see yet another reverse. The RTY right now is up 0.14, up 310. Key numbers back above that 200. So we get a lot of negativity. We also have the PPMs are starting to bleed off. We need PPM 2 to turn up and set up some kind of pattern. So the lows over here was 21.47. We had a low of 21.30, so it was a new low in the pattern, but we got a reversal off of that. And major resistance right here at 2,200. So this market is going to have a hard time at least setting up any kind of bottom here. Whether it gets follow through, we'll have to see. I mentioned last night there's some big downside Fibonacci projections. Let me bring those up for you so you can see that. Yeah, the downside projection is 1961, and I don't see these numbers getting hit at all. I really don't. I don't think we're going to go much below here. If we do, this is setting up probably a right shoulder. We did make a new low, as I just pointed out. So we're just in this consolidation. The concerns are this cycle that came in here and the potential to go down to, down to lower prices where I don't think it can get to 1961. That's another 100 handles lower. But if we get into some kind of crazy liquidation year end, I don't see that these stocks are going to be hit. If anything, the Nasdaq will be subject to some kind of profit taking. Okay. So just a setup for the rest of the broadcast tonight. I'll be going through most of the things I usually do, going through the 10-year, looking at the yield curve because there's a significant event. I'll go into more detail there. Then we'll hit crude, gold, and Bitcoin. I see a lot of requests for a couple of stocks. Maybe I'll cover an Apple and a couple things. So like I said, we'll do a little bit of an extended show tonight just because of the final magnitude of this being the last broadcast of this year. And so I see I have a friend talking about what I was talking about 275 on the SPY. I still think that's I still see higher numbers, just sideways for longer until we get to the end of the year. There's just a lot of cycles going on that are coming into play and a lot of cash flow that's going on right now. So let's go ahead and go to the 10-year. And this goes back to my opening riff as far as that goes, because what we really had was, if we're going to get higher yields, why is the 10-year looking like it is? As I said, this is the daily, and we got a downward reversal. These are the Fibonacci projections here that are becoming, there's a couple of them. There's some projections down to 1.31 and with extreme down to 1.24. And then there's some new ones that have come in out of this pattern, which are suggesting 1.87 and as low as 0.97 or back to 1%, which I think that's a little ridiculous. I've showed you this before. A lot of times these lower end Fibonacci's will come in, and we never come close to that. But the first element a lot of times does get hit. It just depends on what kind of, what we set up here. We got this cycle. I thought we were going to get a cycle low. We didn't get any follow through. This is the day of the Fed meeting, so we didn't get any follow through at all there. And then there's still some probability that this can turn higher, but we're right at that critical point. Let me show you what is really interesting here is the intermediate trends. PPM1 is a minus 1.20. That's a huge downtrend. I've been talking about this number. It's been about 1.52 or so, and that's a number that is going to be the ceiling, I said. On the downside, we still have some positive at 1.43. We traded just below that, and we come into the end of the week, we probably will stay right around this level. But this acceleration in PPM1 is becoming somewhat concerning, and that number is just now starting to turn down. It's down about 1 basis point per week, and so that's going to start in the next several weeks. All of a sudden, instead of 151, 150, 149, and so forth, there's going to be some downward pressure on these yields, which completely is contrary to what you would think would be happening when they're talking about raising yields, but they really aren't, because they're talking about it in May. So no one really cares. And I think what a lot of folks seem to think that the Fed is so far behind the curve. They're so far behind the curve that they're possibly going to trigger a recession. And like I said, I'm still neutral in that camp right now. I haven't joined that dialogue, but what I'm seeing here on these interest rates tell me that rates are not going to go up right at this moment. It could be, 4 or 6 weeks from now, maybe this will stabilize, will stay in this range, and this downward momentum will start to bleed off, and we'll have a possibility of setting up some pattern that would suggest higher yields. At the moment, that's not what's happening at all. And I just want to go and over to the monthly chart here. There's still interesting things going on, but this is another concern. I did a bit of a review before tonight's show, and we've got this mixed thing going on here, and a lot of it has to do with some of the prices that are dropping off on these moving averages. But this PPM1 is in a minus 0.25, which is a downtrend, and that number is 1.48. So all of a sudden, there's a cap between 148 and 152, we'll call it, just rounding these off. And there's the support is at 1.13, which is the projections that are coming out on the Fibonacci on the daily. So, I mean, think about 1.13. That's ridiculous. But that's what's starting to go. If you look at PPM1 here, PPM1 is this decelerating. It's negative already, and it's about to take out its second derivative. But PPM2 is accelerating. So that tells us that there's major support, 1.3, 1.2. There's some of those numbers I was just looking at on the daily. That's where it looks like there'll be support. But there's overhead resistance everywhere on this market. You look at PPM3, this is monthly secular trends, minus 2.18, and that number is up at 1.6, dropping on a monthly basis about 4 basis points. So all of a sudden, 156, we come into February, 152, and unless this momentum bleeds off, on this downward momentum bleeds off, it looks like yields are going to be sideways to down with the potential of coming down to some extreme stream levels down, below 1.2, which I can't believe I'm saying that out loud. But that's exactly what's happening. Because you would think from all of the dialogue, everything that you're hearing, you would think the opposite is about to happen, right? You're thinking that probably, rates, this will bottom out, rates will start to rise, and everything's going to be just as Powell told you it was going to be. I think this time is going to be very different. The only encouraging thing from yesterday, I'm going to show you the yield curve next. We'll cover that, and that's encouraging. And as you know, I know a lot of folks talk about the 210s. I'm a 530 guy. Okay, that this gives me a lot better feel from the yield curve on some of the changes there. So, but you notice it's steepened quite a bit. This is, I believe, on a weekly basis. Let me check. No, it's a daily. And I'll show you what happened yesterday, just on a 60-minute. You can see this just jumped big time. I told you folks a couple of days ago before the Fed that if we see a steepener happen, that's a positive sign. But what's not being illustrated here is there's a potential for a completely flat yield curve or a potential for an inversion. And so, but like I said, this is encouraging from this standpoint. This is an intraday hourly graph of that spread. If we go back to the weekly, You can see we've got a nice little V bottom. Maybe it's the beginnings of something else. But the problem, like I said, is that the 5 is gaining on the 30, which means that the yield curve is flattening and potentially getting completely flat. So the reason why financials did fairly well yesterday is because of this little uptick. So if this continues, then there's still going to be some opportunity in financials, maybe even in the oil patch. Some of those stocks might look pretty good if we can continue some steepening activity. But there's a long ways to go for this story. So we'll continue to watch this and see what happens, right? So here we are at let's go over to the daily chart on crude. It's been acting as expected, actually, just kind of staying above the 10. The 10 and 21 are crossing over. 10 period moving average is rising. It's at a 0.82. That's a pretty bullish sign. The 21, the 10 is going to cross to 21, and that will happen for sure on Monday. When that happens, that tends to be more of a bottoming process. I'm going to get my drawing tool out here real quick. And the potential here is for at least some kind of ABC, come back to test the 40 period moving average. It's the PPMs are starting to turn up on PPM 2 and 3 are turning up. So this right down here, this is the beginnings of a potential bottoming, and we're running right along the 200-day moving average as well. So that's where it's supported at. I think we traded 2 or 3 days below the 200. We're back above it, and it looks like possibly moving back towards 73 to 75 would be my expectation here. The only other chart I want to show you on this is the monthly, and we've got some insane patterns that are unfolding. We got this big monthly reversal in November where we traded from 83.74 down to 64. So we had 20 handles. Some of it had to do with the SPR release. Some of it just had to do with emotions that are coming around the markets. And so we saw a big uptick, and some of that was on the Omicron announcement as well, that all of a sudden the economy is going to stop. And so all that was involved in that pricing of the market. So it's now stabilized, and we're probably going to get back around 73, 75 tops on this pattern. Okay. I'm going to start off with gold monthly. I've been talking about this chart. Continues to be bullish. We're trading 1803. That also a number we've talked a lot about. I don't think, as I've been saying, I know there's a lot of stories out there about this market being manipulated. Maybe it is. I don't know. I continue to follow it. I can just tell you this pattern is bullish, and there's some big potential on the upside, but it's finally getting to the point. We go over to the weekly. Finally getting to the point where we're close to getting it to accelerate. PPM 1 on the weekly chart is now 0.24. We're basically at trend level up. That number is 1806. Be nice to see it go out over that number. PPM2 is turning up. Everything's starting to turn up, which suggests that the averages are going to start to turn up and that the market's going to remain above those numbers. And like I said, if we look at those numbers are right now, 1802.70 is the top end, 1806, 1795. So I'm good with a close anywhere between 1795, 1806. If it ends up above that, that's really good. We've been up to 0530 tonight. And, you know, I know I saw somebody early on before we got started say that, you know, let's not get our hopes up on gold again. But I think what we've been watching, I've been covering this pretty consistently, is that this pattern that we're seeing across the screen, it's like the inverse of the, I guess, of the Nasdaq, and just being in a sideways range. Let me draw that in, because really the top end of the patterns are, you know, right here. This has just been the sideways range, and we're just really just zigzagging in here. We had that flash crash low on that Sunday night, but since then we've just been continuing to do this pattern here, and this is a weekly chart. Question is, will it hit these Fibonacci targets? That's up at 1943 plus. That's 140 bucks higher. That is likely. You know, I saw somebody ask for it, so I'm going to actually bring up silver as well. So we'll do gold and silver. But this pattern is in a really good place. And just look at a daily here for a second. So here we are. 1806 is also the 40-period moving average. That's right where we should see this thing start to break out. You've got Fibonacci projections 1883 at the moment, just off of this little pattern that's out there. So we'll see how this all sets up. Look for a close. If we get a close over 1800 is good, but 1806 plus would be really good for tomorrow. So silver has, we'll cover silver tonight. Silver's got the PPMs starting to move out. We're not quite in trend mode there. We get still overhead resistance at 2282. It's not nearly as positive pattern that we're seeing there. There's no setups really other than resistance around 2245, 2360. That's about it. Potentially a nice bottom here. Got a STX buy signal right at the low, and we'll get a couple of days up. But there's still some downward pressure, so I would expect to stay between the 2220 and the high end of 2280 with the possibility of 2360. That would be your setup there. We'll look at the weekly, really just very, very choppy weekly pattern here. The good news is PPMs are trying to turn up, but they're still negative. So you have major resistance on silver at 2365. Goes in line with what I was talking about on the dailies. Okay, we're going to do Bitcoin and Ether. I'm going to buzz through those pretty quick. Bitcoin continues to hover right along that, let me get over to the daily, right along that 200-day moving average. PPMs are starting to turn up. They're still negative, so there's still some overhead resistance at 48.7, about $1,000 higher. The high print was 49,444, so we're trading down at the lower end. And the 200 right now on this exchange is 47,000 even. So that's what we're set up for. The weekly chart is just suggesting that the potential is if we to stay between really the 48 and 52. I don't really see much there. Still think there's some vulnerability on the downside on this one. And while it's holding the 200-day, that may not be enough. You have to be pretty aggressive if it breaks out, because I think we'll retest that 41 low. All right, so let's go over to Ether. Ether's been acting much better. The pattern's still negative on, somewhat negative on the weekly, but see the PPMs are crossing through, but we've got great momentum on PPM 2.55, the support 36.86, we traded 36.43, bounced off of there, some resistance 41.91. Break above that, then you got to look at the grid, and you're looking at the probably 43.14, extreme 44.80 on this right now. And maybe those PPMs will turn back up a little bit if we got that kind of action. On the daily, resistance here on a short-term level, 42.30, 43.30. Above that, then you've got a pretty clean shot to come back and retest some of these highs up here at 47.84. Okay. Let's go next. Let's go to Apple. And I covered this in our live room the other day, and I want you to see this pattern, and I'm going to do Tesla too. In fact, let me do Tesla first. Let's go to Tesla first. And I want to show you this pattern that's been happening both on the daily and weekly in Tesla. And best I can tell, Elon's selling all of his stock out to go to Mars, right? And start his Noah's Ark to Mars. But we got this RTX sell signal, and this has been happening way over here on the 1st of November. We stayed within a grid. We came down, got an STX buy, go sideways, and we've just been going in this drifting mode. Let me show you the weekly on Tesla. So we got this over here, the RTX sell signal right there on 1/8/21, and then we get this pattern that trades down to the moving averages. We got another RTX sell signal. We actually got two in a row, which is unusual. But this pattern, you see this pattern is setting up here, looks like to me that it's going to continue to drift down into these moving averages. There's decent momentum underlying here. So probably 874, that's what we talked about on the live room the other day. 874 is a magic number. 906 is S3 here weekly. So there's going to be some support there. But with these PPMs starting to cross over, it just tells us that we're probably going to get into a drifting sideways range bound with a downward bias. And you can see how this acted over here. I put a cursor over here. You can see how this area acted here. Well, I think we're going to get the same thing. May end up as going down almost to the 40-period moving average. The 40 periods rising, so that's probably going to be, once again, probably 874. We're close to probably setting up some kind of extreme low price low. So let's go to Apple. Apple got the RTX sell signal last week. We closed RTX 173.02, closed 79.45. Now we're seeing a reversal. We printed up to 82.13, and this is a weekly chart. And the range on the grid on a weekly for Apple, 170 was the low, 169 is S3. The momentum is still very strong. The angle of attack is good, but this may be also that Tesla pattern. If you see my cursor over here where it's moving across, this is probably some kind of a pattern we're going to get here. And I think everything that is going to drive these markets are going to go into sideways range. I don't see this is not necessarily a big rollover pattern. Doesn't mean there's not more downside. Apple could, 157 would be the extreme, and that's rising every week. So let me just see if I can get a number on that. Yeah, it's going up about 3, so 160, 163 would be an extreme on the downside here. As far as buying it and looking for some big rally and a new high, I don't think that's going to happen. I think everything is just going to go into the holiday blues. There may be some volatility. I've been advertising going back last week that this is the last full week of trading from the standpoint of a full week of trading. Maybe we get Monday, Tuesday into Wednesday, since the holidays fall, I believe, Thursday, Friday, right? So that's going to, or Friday, Saturday, I believe, is the holiday. So as far as that goes, I think we just get into holiday markets, and then the final week we're into squaring up the books and some window dressing and things of that sort. And the only thing that would cause something big to happen then would be some big one-sided trade that came in that might push the markets one way or the other. But I think in the end, whether it goes down, there's going to be buyers on, and if it goes up, there's just going to be sellers, like what we saw today at that mid 47 handle on the S&P. That's just where the action is, and we're not likely to get much out of it. Typically, year end is like this. Even last year was reasonably sane at the end of the year, the last couple of weeks. So we'll see what happens. Santa Claus rally, maybe. Like I said, make sure you follow me on Twitter, and I'll do my best to get some of those things out there. So I'm just looking at Will. Thanks for the super chat. I guess you might have some white knuckles here. Will, as far as Bitcoin goes, as I just covered in there, I think I mentioned the other night there's around a 44 handle, 44,000, and then that spike low that we had over the weekend at 41, and that was probably a key number. Below that, it's crazy numbers, 34. So it's somewhat of a crazy pattern and very uncertain. That 200-day I talked about, the analysis, maybe you can go back and when this video reposts that you can go back and watch that section again. So let's do this. Appreciate everybody hanging out tonight. Yeah, it's somewhat funny here. Let me move around here a little bit. Yeah, it's somewhat funny from the standpoint of Elon going to Mars. My wife is convinced that she doesn't belong here anymore, and she wants to go up. She wants to go to Mars. Anyway, let me just see. I'm just looking at a couple of comments here, see what you folks are saying. Yeah, so I'm not going to be able to do any more stocks. I've got hour and 16 in here tonight, so we're going to call it quits. I just want to say again, thank you for everybody that watches. I mean, we've got a really solid crowd that comes in every day. And so, you're supposed to say this at the beginning, but make sure you like and share and subscribe to the channel. And we're still sitting there. It's interesting. I don't think YouTube likes me. I've been at 29,800 on subscribers for about 8 months, and it just won't increase. It just churns. So it's kind of interesting there. Never can figure out what those algorithms are doing. So everybody, once again, have a great new year. Come in, good holiday season. Merry Christmas where it's appropriate. And, you know, like I said at the beginning, I'm honored to have been able to do everything that we've done for everybody, whether it's through Wave Tech, Portfolio Expert, the streams, and now the live trading room. And we got some really cool stuff coming, trading view indicators, all the stuff that you see, all that stuff's coming on. So yeah, thanks, Al. I appreciate it. Will, thank you. You know, there's a lot of folks that I see. Some of you are members of the live trading room, so thank you for that. And I've got some really good ideas that I'm building for that too. So we're gonna hit the ground running on that. So anyway, folks, have a great holiday. Thank you again, and we'll see you, believe it or not, next year. Have a great one. Yeah, FX, I just saw your comment on Kathy. I got price targets of, I think 75 for RK. 78 or 75, something like that. Fibonacci targets. Yeah, Merry Christmas, Brad, Gary, Elizabeth. Thanks for that. Yeah, it is a road trip in the beast, so yeah, it should be interesting.